Today we are going to look at Nvidia. We shall do a comprehensive financial analysis about the stock. We do valuation analysis, and we see could Nvidia reach 20 trillion and what is the probability based on the current announcements, and what should investors be expecting in the next coming years. Nvidia has transformed from a graphics processor company into the world's leading AI infrastructure provider. Rather than selling only semiconductors, Nvidia now offers an integrated platform consisting of accelerated computing, networking, software, and AI development tools. Nvidia currently supplies much of the hardware used to train and deploy advanced AI models. Its competitive advantage includes Blackwell AI systems, CUDA software, NVLink, InfiniBand networking, and AI enterprise software. And this integrated approach creates high switching costs for customers. As of July 15th, 2026, Nvidia closed at 211.80, up 4.06% on the day, with a trading volume of approximately 25.96 billion. The pre-market price is around 212, with a total market cap of roughly 5.13 trillion. So looking at Nvidia's year-to-date gains are far behind the SOX's 74% to 87% rally during the same period. So the company's market cap has eroded by about 1 trillion since its all-time high on May 14th. However, the CPI cooling on July 14th triggered a tech rally, with Nvidia surging 4% on a single day and hitting a new recent high. Now, current valuation has dropped to the lowest levels in nearly 7 years. Forward PE of around 18x, based on next 12 months estimated earnings, below the S&P's 20x and the Nasdaq 100's 23x, corresponds to 21.5x fiscal year 2027 estimated earnings, dropping to 14.7x for fiscal year 2028. Now, a 30%, 35% discount relative to mega cap tech peers like Apple, Microsoft, Google, Amazon, and Meta, which trade at 20x, stock 19x average. Now, Bank of America note says that the current valuation discount implies the market has already priced in a potential 30 to 35% downside EPS shock for fiscal year 2027-2028. However, Bank of Africa believes this discount is unjustified. So looking at fiscal year 2026 full year results ended January 2026, see that full year revenue was 215.9 billion, which was 65% year over year, and the GAAP net income was 120.1 billion, it was 65% year over year, and EPS is $4.9, which is 67%. And data revenue reached 193.7 billion for the full year, contributing nearly 90% of total revenue. Recent key developments include product roadmap, that is Rubin slide delay, which has no major issues, that despite market concerns about a delay in the Vera Rubin architecture mass shipment, Nvidia has denied delaying Rubin Ultra to 2028, reaffirming its plan for a 2027 launch. eBank noted a slight delay in Rubin production ramps due to lead stock heat sink issues, but these are resolved, so projections indicate 1.7 to 1.8 million Rubin chips and 5.5 to 6.0 million Blackwell chips shipped in 2026. Now the market share still remains solid. As of end 2025, Nvidia held 97% market share in the AI server GPU market, up from 95% a year ago. So including SSIC's current share, mid-2026, is estimated that 80 to 88%, projected to remain at 70 to 75% through 2030. And now looking at the ASIC, competition is not zero. Some game. Morgan Stanley revealed during road shows that one major frontier model client, which previously relied heavily on ASICs, has now increased its Nvidia compute share to nearly 50%. So clients ultimately compare the total cost per token, and Nvidia maintains an absolute advantage with the lowest cost per token generation. Now coming to our analysis, we shall pass through these scenario revenue models for fiscal year 2027. Our bear case is 330 billion and bull case is 350 billion. In our operating margin assumptions for Nvidia to reach 20 trillion capacity valuation, our bear case is 45%, base case 50%, and bull case 55% operating margin. Now, maintaining margins above 50% over many years would require continued pricing power, strong software growth, and disciplined operating expenses. So, net income projections, we think if Nvidia is to reach this valuation, it would need by 2030 to be at least 250 billion, and through 2035 to be at 450 billion, and 2040 to be at 700 billion. Now, for Nvidia to reach extraordinary earnings, valuation depends on what multiples investors are willing to pay. And for Nvidia to reach a 20 trillion valuation, would likely need to succeed in multiple areas simultaneously, like AI infrastructure revenue exceeding 1 trillion annually, and software and services becoming a much larger percentage of revenue, with robotics generating tens of billions of dollars annually, and automotive AI becoming a significant business, Omniverse and digital twins becoming widely adopted, with continued leadership in networking and AI platforms. So our timeline analysis is if Nvidia continues executing exceptionally well, we could see 2027, 2028, expansion of AI infrastructure, Blackwell, Rubin, sovereign AI, and networking. 2030 to 35 would see growth in robotics, enterprise AI, healthcare AI, and autonomous systems. And 2035 to 2040 would see AI becoming deeply embedded across the global economy, and Nvidia maintains leadership. A $20 trillion valuation can be more plausible under such an optimistic scenario. And the reasonable assessment of this could make us watch over the next 10 to 15 years. So, in conclusion, Nvidia has achieved something rare in corporate history and has moved from being a successful semiconductor company to becoming a central infrastructure provider for a technological revolution. So the transition from GPUs, AI computing platform to AI infrastructure ecosystem is the reason investors are willing to consider valuations that are previously unimaginable. So please let me know your thoughts. Please like, share, and subscribe.